conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded and the duration for today's call will be for 45 minutes. I now hand the conference over to Mr. Abhishek Jain, Vice President, Corporate Treasurer and Head of Investor Relations. Thank you, and over to you.
Yashasvi, thank you. Warm welcome to our Q4 FY26 earnings call. We'll begin the call with the business highlights and overview by Srinivas Pallia, our Chief Executive Officer and Managing Director, followed by updates on financial overview by our CFO, Aparna Iyer. We also have our CHRO, Saurabh Govil, and our Chief Strategist and Technology Officer, Hari Shetty, on this call. Afterwards, the operator will open the bridge for Q&A with our management team. Before Srini starts, let me draw your attention to the fact that during this call, we may make certain forward-looking statements within the meaning of the Private Securities Litigation Reforms Act 1995. These statements are based on management's current expectation and are associated with uncertainties and risks, which may cause the actual results to differ materially from those expected. The uncertainty and risk factors are explained in our detailed filings with the SEC. Wipro does not undertake any obligation to update the forward-looking statements to reflect events and circumstances after the date of filing. The conference call will be archived and a transcript will be available on our website. With that, I would like to turn over the call to Srini. Srini, over to you.
Thanks, Abhishek. Hello, everyone. Thank you for joining us today. Geopolitical and policy disruptions have become the new normal. Despite these headwinds, IT spending has shown resilience. Cloud, data, and AI continue to attract investment as they provide infrastructure for future growth. Client priorities are shifting with spending decisions increasingly tied to outcomes. And at Wipro, we continue to make decisive investments to navigate the AI-first world. With that context, let me now turn to our performance in Q4 and for the full year FY 2025-26. All growth numbers I share will be in constant currency. Our IT services revenue for Q4 was $2.65 billion, reflecting a sequential growth of 0.2% and degrowth of 0.2% on a year-on-year basis. Our operating margins came in at 17.3%, a contraction of 30 basis points sequentially. Order booking for Q4 was at $3.5 billion, which is a growth of 3.2% sequentially and a degrowth of 13.9% on a year-on-year basis. We had 14 large deals totaling $1.4 billion this quarter. For the full year, IT services revenue were $10.5 billion, reflecting a year-on-year degrowth of 1.6%. Our operating margin was at 17.2%, an expansion of almost 15 basis points as compared to FY25. Now to our strategic market unit performance in Q4. Americas 1 delivered sequential and year-on-year growth driven by strong performance in consumer, technology, and communications. The healthcare sector was impacted by seasonality and policy changes. Americas 2 declined sequentially and on a year-on-year basis. The BFSI sector was impacted by delayed ramp-ups on some large deals that were closed earlier this year and by certain client-specific issues. Europe grew sequentially and has remained flat on a year-on-year basis. We see good traction in the UK, specifically in the BFSI sector. We also see strong deal momentum in Germany. APMEA grew sequentially and on a year-on-year basis. Growth is driven by Southeast Asia. We are seeing traction in the BFSI, technology, and communication sectors. We are encouraged by the momentum we are seeing in the APMEA region, both in performance and bets we continue to make there. A strong example is the strategic deal we announced recently with the Olam Group, expected to exceed $1 billion in contract value with a committed spend of $800 million. This is one of our largest engagements to date in APMEA. In this quarter, we also closed several strategic engagements. Let me highlight two examples with global technology leaders who drive AI at scale and how Wipro is partnering with them. In my first example, a leading global technology company has engaged Wipro to help run and improve its frontier AI models. Wipro will manage the end-to-end operation of these AI models from training, governance, and evaluation to domain-specific validation. In fact, this engagement will be done through a specialized global delivery platform. We will make these models more accurate, reliable, and safe while ensuring they can be deployed and managed at scale. In my second example, we have been selected by a leading global semiconductor company to provide engineering services that accelerate product development and manufacturing across its complex hardware platforms at locations distributed globally. We will support the entire engineering lifecycle from product development to performance testing analysis before final shipment is made by our clients to their end clients. This will help our client achieve faster resolution management, higher yield, and improved governance with AI-driven analytics and automation. As intelligence becomes industrialized and widely accessible, we are making a deliberate strategic pivot to stay ahead. As you might be aware, we have launched a dedicated AI-native business and platforms unit to expand beyond a services-only model to a services as a software approach. This unit will operate with dedicated leadership, focused investments, and a distinct operating model to accelerate enterprise-grade agentic AI solutions. This unit will also incubate new AI-led businesses through an invest-build-partner approach, in addition to collaborating with Wipro Ventures and our partner ecosystems. Together with core services, this creates a dual-engine model driving transformation at scale while building AI-native platforms that differentiate services, enable repeatable deployments, and unlock nonlinear growth. With that, let me move on to our guidance for the next quarter. In Q1, we are guiding for a sequential growth of -2% to 0% in constant currency terms. Thank you. I'll now hand it over to Aparna, our CFO.
Good evening, everyone. Let me share a quick update and then we can open it up for Q&A. Our IT services revenue for Q4 grew 0.2% sequentially in constant currency terms and 0.6% in reported currency. Our revenues declined 0.2% on a year-on-year basis in constant currency terms. For the full year FY26, IT services revenues declined by 1.6% in constant currency. Our operating margin for the quarter was at 17.3%, a contraction of 0.3% over Q3 26, and a 0.2% contraction on a year-on-year basis. With this, our full-year operating margin stands at 17.2%, an expansion of 15 basis points year-on-year. We maintain the margins within a narrow band even after absorbing 2 incremental months of DTS Harman, and we also rolled out salary increases effective 1st March. As we move into Q1, we will have the headwinds of 2 months of salary increase and a few large deals that we won, and the volatility could be there in our quarterly performance. However, having said that, our endeavor would be to maintain these margins in a narrow band in the medium term. Net income for the quarter was at 35 billion rupees. Adjusted for the impact of labor code changes, our net income increased 3.7% sequentially. For the full year, our net income increased 2.2% year-on-year. This was after absorbing the impact of restructuring charges in both Q1 and Q3 of last year. EPS for the quarter was at 3.3 rupees and 12.6 rupees for the full year. Moving on to our strategic market unit and sector performance, all the growth numbers that I will be sharing will be in constant currency. Americas 1 grew 0.3% sequentially and grew 2.9% on a year-on-year basis. Americas 2 declined 2.6% sequentially and 6.7% on a year-on-year basis. Europe grew 2% sequentially and was flat on a year-on-year basis. APMEA grew 3.1% sequentially and 8.8% on a year-on-year basis. Moving on to sector performance, BFSI declined 1.3% sequentially and 0.5% year-on-year. Health declined 4.4% sequentially and was flat year-on-year. Consumer grew 1.7% sequentially and declined 2.9% year-on-year. Technology and communication grew 5.3% sequentially and 10.4% year-on-year. EMR grew 1.1% sequentially and declined 5.9% year-on-year. Let me share some other key financial metrics. Our operating cash flow continues to be higher than the net income and stood at 112.6% of net income for FY26. Our gross cash, including investments, was at 5.9 billion. Accounting yield on average investments held in India was at 7.3%. Our ETR was at 23.5%. In terms of guidance, to reiterate what Srini said, we expect our revenue from IT services business segment to be in the range of $2.597 billion to $2.651 billion. This translates to a sequential guidance of -2 to 0 in constant currency terms. Lastly, I'd like to share that in our recently concluded board meeting, the board of directors have announced and approved a buyback of 15,000 crores at a price of 250 per share. This is the largest buyback that Wipro has announced, and we expect to buy back 5.7% of the paid-up capital. The buyback is expected to complete in Q1 27, subject to shareholder approval. Our endeavor has always been to return substantial portion of the cash generated through our operations back to our shareholders. In FY26 alone, we distributed dividends of $1.3 billion, taking our total payout ratio for 3-year block ending FY26 to about 88%, which is significantly higher than the minimum threshold of 70% that we have as per our capital allocation policy. With that, I will hand it over for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Prateek Maheshwari from HSBC Securities. Please go ahead. I'm sorry, his line is disconnected. We'll move on to the next question from the line of Sandeep Shah from Equirus Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, the first question is, there has been a good large deal wins which has happened early 1H as well as fourth quarter of last year. And we kept on telling about delay in these large deals which was expected to come in Q3, then we said Q4, then we said it will come in 1Q, but the guidance does not show that. Despite the nature of the deal being cost takeout vendor consolidation, why this delay is happening?
Thanks, Sandeep. Thanks, Sandeep. This is Srini here. Thanks for your question. Let me just talk about the quarter four performance in the context of the four SMUs we had. 3 out of the 4 SMUs, Americas 1, Europe, and APMEA, have grown sequentially. Having said that, specifically Americas 2, we saw significant softness, and this is specific to the BFSI sector there. This has been a combination of both client-specific issue and delay in ramp-ups that you're talking about. The reason for the delay is very client-specific, but we see that opportunity coming up sooner than later, and that will give us growth in that particular account and that particular sector.
Okay. And do you believe second quarter onwards there could be delayed ramp-up can actually pull up the growth, or do you believe client-specific issue because of the geopolitical issue and macro may continue?
So as far as this particular client is concerned, it will end in quarter one, Sandeep, and there is no further impact for us materially. That's number one. Number two, as far as geopolitics is concerned, and we have not seen any clients at this point in time demonstrating any specific behavior. And also, if we reflect on the pipeline that we have across the markets, including countries, and across the sectors, a very strong pipeline. Of course, it's a very competitive landscape, and the competition is very intense. And the way we have gone ahead with the Olam deal, which is a very transformational deal, long-term deal, also taking their entire IT into Wipro, welcoming them into Wipro family. The second one that we announced yesterday, which was part of the vendor consolidation. The kind of deals that are coming off are very different, but very strategic, and we are staying focused on execution for us, which will help us in the quarters ahead.
Okay. And just last two, there has been a notable decline in a top client. What is the reason for the same? And second, can you give us the inorganic growth contribution you have factored in the first quarter growth guidance?
So, these two deals that we've announced in this month, Sandeep, are a part of our guidance. At the midpoint, we've assumed both these deals to start yielding revenues for 1.5 months, halfway through the quarter. To your point on the top account growth, it's a sequential decline, but from a year-on-year standpoint, it continues to have grown. And we are very confident that it will continue to come back as we go through the quarters.
Okay. Is it possible to quantify inorganic growth in the guidance?
So they are not inorganic. They are actually strategic deal wins. If you look at it, Olam is a strategic deal win with it's a relationship that is, it has committed revenue. So, and even the other one that we announced was a part of the vendor consolidation strategy for one of our top clients, and we continue to participate in these kind of deals. And both will be a part of our numbers and our guided range.
Okay. We'll come in the follow-up. Thanks. All the best.
Thank you.
Thank you, Sandeep.
Next question is from the line of Ravi Menon from Axis Capital. Please go ahead.
Hi, thanks for the opportunity. It's been beyond the top customer where we've seen sharp decline. We've also seen top 2 to 5 customers also decline slightly. The top customer decline, although you said it's temporary, it's a very sharp decline. Can we talk a bit about what led to this and why? What gives you confidence that this will be temporary?
Ravi, if you look at it, our top client has been producing a healthy growth for a fairly long time, right? This kind of one-off quarter volatility is not something that we are unduly concerned about. The relationship remains very strong, and you should continue to see it bounce back.
Thank you. And the unbilled revenue has grown, this quarter, for more than 80 million, and then we also seen some long-term unbilled revenue. Could you talk a bit about what's led to this, and how should we see that trend?
No, so I don't think. The unbilled revenues that have gone up is more a quarterly aberration. It should correct itself from a from a year-on-year standpoint. Actually, our DSO has remained flattish. Like I said, our operating cash flows has remained 112% of net income. We are not seeing any large exposures or pile-up of our unbilled in our balance sheet. From a long-term unbilled standpoint as well, I think it's fairly contained, and we've shown consistent improvement. Yes, some of the larger deals, as they pick up, we are open to, they will come with some amount of balance sheet leverage, but nothing that's unduly different than what we do as business as usual, Ravi.
All right. Thanks a lot. Best luck.
Yeah.
Thank you. Next question is from the line of Dipesh Mehta from Emkay Global. Please go ahead.
Yeah, thanks for the opportunity. A couple of questions. First, on the clarification part, you said BFSI weakness was because of 2 factors. One is client specific, and second is delay in ramp up. And one of the question answer you indicated about some of the issues likely to be ending by Q1. Which part you are indicating by Q1 it should end?
We have said that the client-specific issue that we have seen in one of our clients in Americas too has had an impact in both Q4 and Q1, and there won't be a continuing impact of that going forward.
What about the delay in ramp-up part?
Yes. So if I have to characterize, we've had several large deal bookings, right? Now, the one that we announced on Phoenix, it is fully ramped up to plan. There's no delay, right? If you look at the other 3 mega deals that we spoke of, one of them is on plan, and we are continuing to ramp up. We are seeing challenge in one of those large deals that we spoke about, where we are seeing a delayed ramp up, which is in particular impacting the growth rate of that particular sector and that particular market unit. Outside of that, BFSI growth rates are pretty good in Europe and ASEAN. As that client comes back and we start to ramp up, you will see those growth rates improving. That is our. I hope that.
Can you give some sense about, let's say, what factor is leading to delay in ramp up? Whether so if you can provide some details around it qualitatively, what is leading to some of those delays? Second question which I have is, if I look, let's say, the couple of transactions which we close or in the process of closing, we included in the guidance. If, let's say, any delay in the some of those closures, do you see risk to that guidance kind of thing?
We guide in a range. There is, like I said, we guide in a range, and there is a midpoint, and we have some cushion both on the downside and on the upside. And for now, we are comfortable within that guidance range. On the first point,
Srini here. On the first point, this is a very client-specific issue where they have changed a little bit of the strategy around some of the things as part of the business, because of which they have delayed it. But having said that, we have the clear visibility going forward. It's about the matter of timing, when and how much, and that should help us going forward, Dipesh.
Understood. And last question from my side. Just want to get some sense about how Capco is playing out. Thank you.
Yeah, go ahead.
So, Dipesh, as you know, Capco is our tip of the spear for the consulting piece on the BFSI. They are definitely doing well. And if you look at sequentially, Capco is performing very well. And also on the year-on-year, both have been very positive. And in fact, Capco had one of the highest revenues in the last several quarters. So Capco is making a big difference, in terms of the whole AI advisory and consulting, and the way they are being proactively shaping the client's thought process in terms of the whole geopolitics and in terms of the trade and the tariff and the technology transition has been really good.
Thank you.
Thank you. Next question is from the line of Vibhor Singhal from Nuvama Equities. Please go ahead.
Yeah, hi. Thanks for taking my question. And congrats, Srini and Aparna, for the buyback announcement finally. I know the market participants have been waiting for this one for quite a while. Two questions from right. One is
Vibhor, I'm sorry, you're sounding muffled. Vibhor?
I'm so sorry. Just give me a second.
Are you on your handset mode? Can you use your handset mode?
Switch to the handset now.
Yes, it is clear now. Please go ahead.
Yeah. Okay. Sorry for that. Yeah. So a couple of questions from my side. Srini, on the energy and utility vertical, this has been a vertical in which we've been very strong for quite a while. Just wanted to pick as to what are the conversations that you're having with the clients at this point of time because of the Gulf War that is going around. Will the crude prices and the volatility in it impact our business in this vertical, either positive or negative? Any conversation that have already started on that regard, or is it too early to call out any impact of that on the segment?
So Vibhor, if from our perspective, if you look at the quarter four, we have seen a sequential growth, and both manufacturing, particularly auto and industrial, has seen impact otherwise on the reason for tariffs. Now, coming specifically in the context of geopolitics, Vibhor, I think there is some of the clients are waiting and watching, but having said that, they have not dramatically changed their strategy. For example, what they're trying to do, especially in the manufacturing sector, if you will, they're looking at how do you secure the supply chains, make it more visible and more dynamic going forward. And that's some of the opportunities that we are looking at in the context of AI that can actually help. So that's a trend that we are seeing. Auto industry, obviously, they're also looking at how the markets are going, and it varies from country to country in terms of how the business is going. And the third is in terms of overall manufacturing, we have not seen any clear change, but they have been constantly under pressure because of tariff-led disruptions that they're going through. And they're also looking at what kind of consumer demand they can have. And also they're keeping a close watch on the input costs because that will also impact their final product cost. So they are trying to sharpen their budgeting, I would say tightening at this point in time.
Got it. My second question was basically on, again, sorry to harp on the Q1 guidance once again. As Aparna mentioned, we are taking around 1.5 months of would approximately come to around 0.7-0.8% of revenue. Then another 0.7-0.8 from the 1 month incremental of Harman integration. That leads to almost 0.5%.
I'm sorry, Vibhor, you're sounding muffled again. Can you repeat the last part, please?
Okay. Around 1.5 months.
Okay, now it's fine. Please go ahead.
Yes. Oh, I'm so sorry for the poor connectivity. Yeah. So as Aparna said, I think the two deals will contribute 1.5 months of revenue. That's around 0.7, 0.8% of revenue. Harman acquisition, one incremental month in Q1 again. That's another maybe 0.7, 0.8. So around 1.5% growth is coming from these three factors. So these aside, I think the remaining business seems to be quite a sharp decline in Q1. You mentioned one of the client-specific issues which you will continue to face in Q1. But are there any other significant client ramp downs or any other delays that we are seeing because of which this Q1 growth, organic growth, or if I can call the growth beyond these three, seems to be so weak?
DTS Harman is fully in our Q4 numbers. So,
but in Q4, that was only 2 months. So on Q1Q, this will add another month in Q1.
No. Q4 was all 3 months.
All 3 months. Okay.
Yeah. So that is that is the only inorganic piece, and our growth for Q1 is, yes, there are these 2 deals that we've spoken about, which will be there, and it will add to our revenues in Q1. And we've assumed that they will start yielding revenues mid-quarter.
Mid-quarter. Got it.
They're not?
This one.
Yeah.
Yeah,
I would if you look at it as organic growth, as we've done strategic deals we've taken. Yes.
Very much point taken. Just my last question, but on the margins. I think very strong performance on the margins in this quarter, despite wage hike and Harman integration as well. Do we believe these margins are sustainable in the coming quarters as well, given that we'll have a couple of these deals, cost takeout deals also that we will be factoring in? Do you believe we will be able to maintain their margins at around the current levels as we have always maintained, as we have always stated that this is our target range?
There are 3 areas where we are going to be investing in. We've already rolled out the wage hikes effective 1st March. So we will have 2 months incremental impact, which will have to be absorbed, right, in Q1. 2, we are winning some of these large deals, and they are won in a competitive environment. They will come with their share of, lower margins, especially as we start these deals, right? Second, there is, certainly around capabilities. We've acquired the DTS Harman, the connected services piece, which is also putting pressure on margins. And as I look ahead, we will continue to actually accelerate investments, especially around Wipro Intelligence, the platform unit that we've announced. And it will need a lot of investments that we will work through and share with you transparently as we go through the process. As we get, form our strategy around it, that will also be an area of focus for investment. Given all this, we will have to drive operational improvements. That is a continuous process, as you know. And like I said, maybe we see some quarter-on-quarter volatility, but our endeavor is going to be that in medium term, we continue to drive that productivity and cost takeout and deliver on the promise of, actually AI helping us to deliver our fixed price programs better. And we continue to optimize all other overheads. And as we do that, hopefully, we are able to keep our margins on a medium term and narrow down.
Got it. Great. Thank you so much for taking my questions, and wish you all the best.
Thank you. We'll take our next question from the line of Prateek Maheshwari from HSBC Securities. Please go ahead.
Hello. Thank you for the opportunity. Srini, I've got a couple of questions. I'm sorry for harping again on Americas too. Just wanted to understand, I understand that there's a client-specific issue that you guys have faced in the fourth quarter and you'll face in the first quarter as well. However, if I look at Americas stores over a 1-year period or a 3-year period, it seems that there's been a consistent, multiple client-specific issues that have happened. So just wanted to understand your thoughts on this, if it is a mere coincidence or what are your thoughts basically on this? And this second question from our side is around the AI partnerships. So we have seen your larger peers have have along their partnerships with probably frontier models like Anthropic, Mistral AI, and OpenAI. But we haven't heard a lot from you guys. So just wanted to understand how you guys are planning around this, and if you guys are planning for GTM around with these models as well. Thank you.
Thanks, Pratik. You're right. AI is a central strategy for Wipro. 2 quarters back, we had launched Wipro Intelligence, which is a combination of industry and cross-industry and functional platforms and solutions. And this quarter, last quarter, we announced the formation of AI native business and platform unit. The reason why we are doing it is in the last 2 quarters based on our experience, both in terms of industry platforms and the delivery platforms, which is Wings for run and operate and Vega for our SDLC lifecycle, which is more on the change and transform side. We have seen a very good traction. The clients feel very comfortable with the way we have put the guardrails, making sure we align the technology to what they are actually using, making sure it is secure, reliable, and responsible as well. Also, in terms of the productivity benefits that we can offer to them, both on the existing engagements and also the new engagements we plan to do. And we will continue to invest in this. And I think Aparna called out as well that Wipro Intelligence and the new AI native business and platform unit is going to pivot us into a services as a software industry. So while we continue to deliver the services to our clients, this should help us to actually create a software as a service through our platform model. We already saw some success with our platforms, be it in healthcare, be it in banking, insurance, telecom. So we want to see that because the clients are actually feeling very comfortable with the fact that the whole platform is AI native, which is AI powered, and it's able to well integrate into their domain with the kind of agent and agentic operations we're trying to bring in. So that investment will continue, Pratik.
And so, sir, first question, if you could share also on Americas too. This so the question was that there's been multiple client-specific issues over the years. Just want to understand what your thoughts on that.
Yeah, I think this quarter, rather last quarter, it was something that we called out as well very specifically for the 2 reasons, like you mentioned in your question itself. That one is the specific client ramp up that has not happened. Aparna talked in detail about that. But we feel, and I also answered that question, and we feel fairly confident that client come back because there was some directional change and they wanted to pause before they had the clarity around that. The second one was something that the account specific issue that happened, which impacted for us in quarter 1 and in addition to quarter 4. Having said that, if you look at our top accounts, we continue to stay focused on our top accounts with a very clear account management strategy. And in fact, many of our clients are asking us to come back and help them in terms of AI advisory and consulting, in terms of how to navigate in this AI world. So what's important for our accounts team is to be very proactive and leverage Wipro Intelligence and platforms and solutions and kind of help the client through this disruption process.
Srini, if you could allow me to squeeze one more question, I just wanted to ask, you said that you have a positive view on BFSI in APMEA and also in Europe. So just wanted to ask, outside of the client-specific issue that you may face in first quarter, do you have a positive view on the US BFSI as well?
So I think from overall, I think the best way for me to reflect, Pratik, in your question is the kind of pipeline that we have. And I did talk about having a very secular pipeline across industries and across markets. And your question specifically to BFSI, if I were to look at Americas and Europe and APMEA, and also the Capco, the question that came up, we continue to see very good traction. We continue to see very good pipeline. And some of this, what the kind of work that Capco does is very consulting-led and advisory-led. And we also want to, see how those implementations for the clients can happen. And for me, clearly from a BFSI perspective, right, very clearly the client wants to, invest in AI around data platforms and, agentic workflows and security. And, while they continue to optimize, but the spend in this specific area around AI, data, and cloud continues.
Thank you, sir.
Thank you. We'll take our next question from the line of Abhishek Chindarkar from InCred Research. Please go ahead.
Hi, thanks for the opportunity. Yeah, can you hear me?
Go ahead. Yes.
Yeah, hi, thanks for the opportunity. The first question is regarding the the contribution for Harman. So when we gave the guidance last time, in the third quarter, the 0.8% was the contribution, and incrementally 2 months was assumed when we gave the fourth quarter guidance. Can you just quantify what would have been the contribution for this quarter, or if you can just quantify the organic growth for us? That's the first question, and I'll just ask the second one later.
So your question is around how much did the Harman acquisition contribute in Q4? Is that your question?
Yes.
So, we've actually made a stock exchange filing around the revenues of the organization. You can assume, the quarterly run rate around that much.
Understood. That's helpful. The second thing is on, the top client, and maybe it has been asked, but not just the top, but if I look at the top 5, and if I look at the client metric and the attrition across some of the larger accounts, do you foresee this kind of stopping or halting in the next quarter, or we may continue to see some challenges in the accounts, larger accounts, even in the next quarter? Thank you for taking my question.
I think our overall growth rate also tend to reflect in our top client metric growth rates as well, right? That said, if you had to look at the year-on-year performance of our top client and it's been largely flattish year-on-year constant currency. Top 5 actually has grown on a year-on-year constant currency by 0.2%, and top 10 has grown a positive 1.5% on year-on-year constant currency. And therefore, are we unduly worried about the top relationships that we have? No, we're not worried about it. That said, our constant endeavor is to continue to win with our largest clients in the market, and some of the wins that we have announced even this month are towards that. So you will continue to see us growing and expanding this, because this is the way in which our growth will come from. It's our number one strategic priority. We will work with large clients, and that is the endeavor.
Thank you. Super helpful. Thank you for taking my question.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to Mr. Abhishek Jain for closing comments. Over to you, sir.
Thank you all for joining the call. In case we could not take any questions due to time constraint, please feel free to reach out to the Investor Relations. Have a nice day. Thank you.
Thank you. On behalf of Wipro Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.